If you choose to look away now, you are essentially signing a contract with a future of mediocrity, while the walls of the old financial world crumble around you. However, if you stay until the final second of this broadcast, you will understand that the greatest glitch in the history of capitalism is currently unfolding, and it is a door that only stays open once every 100 years. Most of you are waiting for a sign, a miracle, or a market crash, but you are failing to see the $124 trillion wave that is already sweeping the floor beneath your feet. On March 9th, 2009, the S&P 500 index closed at a staggering 676 points, marking a moment where the global financial heart nearly stopped beating. The world was in a state of absolute freefall, paralyzed by the ghost of Lehman Brothers and the fear that the Great Depression was returning for a second act. While the masses were selling their futures for pennies out of sheer terror, a school teacher named Margaret decided to play a different game. She took $50,000, her entire life savings intended for a house, and placed it into the belly of a simple index fund. Her family called it madness. Her friends called it financial suicide, and the headlines called for total collapse. Yet she ignored the noise of the herd. Today, that single act of cold, calculated defiance is worth approximately $590,000, proving that wealth is not reserved for the genius, but for the disciplined. Margaret did not have a crystal ball. She did not have a high-frequency trading desk, and she certainly did not have insider information from the marble halls of Washington. She simply understood a fundamental law of the universe, that fear is the greatest creator of undervalued assets, and that a generation's worth of wealth is often minted in a single day of panic. We are standing at a similar precipice today, but the scale of what is coming makes the 2009 recovery look like a footnote in a history book. Most of you are living through this convergence of forces with your eyes closed, unaware that we are entering a period of wealth transfer that hasn't been seen in nearly a century. We are talking about $124 trillion, a number so large that it exceeds the total annual economic output of every single country on this planet combined. This is not a typo, and it is not a conspiracy. It is a mathematical certainty that will unfold over the next 2 decades, between now and the year 2048. This massive tide of capital will change hands, and yet, the average person is too distracted by short-term volatility to position themselves at the shoreline to understand the magnitude of this shift. We must look at the story of the longest bull market in the history of the United States, from the lows of March 2009 until the early days of January 2026. The market did not just crawl back, it exploded by over 900%. The index recently shattered the 7,000-point ceiling, a milestone that was unthinkable when the world was mourning the collapse of the old banking system. During this era, $100 invested at the absolute bottom grew into 1,000. But the true winners were not the suits on Wall Street. The real beneficiaries were the silent participants, the nurses, the accountants, and the small business owners who refused to stop investing when the world was screaming. The data reveals a story that the media rarely covers, showing that in the year 2010, there were roughly 8.4 million millionaire households in the United States. By the end of 2024, that number had nearly tripled to almost 24 million, adding 15 million new millionaires in just 14 years. This is equivalent to the entire population of the New York metropolitan area, ascending to the millionaire class in less than a decade and a half. These people were not tech founders selling unicorns, and they were not hedge fund managers manipulating the treasury. They were ordinary citizens who utilized retirement accounts and index funds to capture the upward trajectory of a recovering empire. According to the latest global wealth reports released in 2025, the United States added 379,000 new millionaires in 2024 alone. This averages out to more than 1,000 new millionaires being minted every single day of the year. UBS identifies these individuals as everyday millionaires, those with a net worth between $1 million and $5 million. A group that has quadrupled globally since the year 2000. Today, this group collectively controls over $107 trillion in wealth, and the path to joining them is neither a secret nor a gamble. What makes the current moment so vital, more so than the opportunity of 2009, is the phenomenon known as the Great Wealth Transfer. Research from 2025 indicates that $124 trillion in assets will move between generations between now and the year 2048. This is, without question, the largest movement of capital in human history, dwarfing every stimulus package and every pandemic relief effort ever attempted by a government. To give you perspective, the entire global effort to combat the pandemic was roughly $5 trillion. A drop in the ocean compared to the wave we are discussing. The wealth transfer represents 25 times that amount flowing through the veins of the economy over the next 20 years. This wealth, accumulated over 8 decades of American industrial and technological expansion, is about to cascade down through the generations like a waterfall. The mechanics of this are inevitable, but the implications for your personal net worth depend entirely on your ability to see the flow before it arrives. The baby boomer generation, those born between 1946 and 1964, currently holds the keys to 52% of all wealth in the United States. This represents roughly $78 trillion concentrated within a single aging demographic. And nature is about to demand a redistribution. The youngest members of this generation are turning 62 this year, while the oldest are rapidly approaching 80. Over the next 20 years, this massive treasury will be handed down to children, grandchildren, and various charitable organizations. Experts estimate that $106 trillion will flow directly to heirs, while $18 trillion will be diverted to the nonprofit sector. Generation X stands on the threshold of inheriting approximately $39 trillion over the next 25 years. A windfall for a group often called the forgotten generation. This capital will arrive at a pivotal stage of life. Just as many are balancing the costs of caring for aging parents and supporting their own children. For this group, the inheritance wave is not just a luxury. It is a transformation of retirement prospects that currently appear unstable. Meanwhile, the millennials are looking at a $46 trillion windfall that will arrive exactly as they enter their peak earning years. This creates a multiplicative effect where inherited capital compounds alongside career income, potentially creating the wealthiest generation in the history of our species. Even Generation Z will begin to see the first ripples of this transfer as it accelerates through the 2030s and the 2040s. But the critical detail that most people miss is that this opportunity is not just about who your parents are. It is about the cascading effects that this movement of $124 trillion will have on the entire structure of the global economy. Wealth in motion is wealth that can be captured by anyone positioned in its path. When trillions of dollars move into investment accounts, asset prices are driven upward, benefiting every person who is already invested in the market. When heirs use their new capital to purchase homes, real estate values appreciate, rewarding existing homeowners with unearned equity. When this capital is deployed to fund new businesses or technological breakthroughs, job creation accelerates, benefiting the workforce across every sector. The wealth transfer creates a rising tide that lifts all boats. provided those boats are actually in the water. Understanding where this money will flow is the second key to mastery in the coming decades. Research from major financial institutions like Bank of America shows that younger investors have radically different priorities than their predecessors. 72% of investors between the ages of 21 and 43 believe that traditional stocks and bonds are no longer sufficient to achieve elite returns. This generational shift in philosophy will redirect trillions of dollars away from blue-chip stability and toward alternative investments, direct company ownership, and emerging asset classes. Artificial intelligence infrastructure is already absorbing massive amounts of this capital, with companies like NVIDIA leading the charge into a new industrial revolution. Clean energy, healthcare innovation, and digital assets are all positioned to capture a disproportionate share of this redirected wealth. You do not need to abandon the old ways, but you must understand that the gravity of capital is shifting. The sectors that boomed under the control of the previous generation may underperform as the new guard takes the wheel and drives the world toward a decentralized, automated future. Real estate will also undergo a violent restructuring based on geographic positioning. As wealthy heirs seek out new places to live, demand will spike in specific hubs, while supply increases in areas where the previous generation was once concentrated. Suburban areas and traditional retirement destinations may see a moderation in prices as estates are settled and properties are liquidated. Conversely, markets that attract younger workers and technology investments will likely see intensified competition. The data already proves this, as median home prices have risen over 150% since the year 2000. But the distribution of that growth has been wildly uneven. Deploying $500,000 in a city like Austin will yield a vastly different outcome than deploying it in a city facing population decline. Geographic awareness is now a prerequisite for wealth accumulation. Furthermore, the strategy of staying invested through the transition remains the only reliable path to the summit. Margaret, our school teacher from 2009, succeeded because she had the discipline to remain in the market through the debt crisis of 2011, the shutdown of 2013, and the trade wars of 2018. She did not blink during the pandemic crash of 2020 or the bear market of 2022. At every one of those points, the headlines were screaming that the rally was over and that the end was near. Yet, those who stayed the course captured the subsequent recovery every single time. The S&P 500 climbed from 2000 in the year 2014 to 7,000 in early 2026, rewarding those who traded their anxiety for patience. Goldman Sachs research illustrates the brutal cost of hesitation, showing that missing just the 10 best days in the market since 2009 would have slashed your annual returns by nearly a third. The best days almost always occur in the middle of the most terrifying periods of volatility. The same pattern will define the great wealth transfer, with recessions and crises serving as the background noise to an unprecedented upward trajectory. If you listen to the warnings that the old rules no longer apply, you will likely find yourself on the outside looking in. Just like the people who missed the recovery after 2009, the underlying force of $124 trillion seeking a home is too powerful to be stopped by short-term turbulence. Consider the math for a 35-year-old today who commits to investing $500 a month into diversified funds for the next 25 years. At a historical average return of 10%, that contribution grows into approximately $665,000. If economic growth runs even 1% higher due to the massive injection of inherited capital, that outcome shifts dramatically. If you increase the monthly contribution to $1,000, a figure that becomes realistic as your career progresses, You are looking at a portfolio
Here is the
worth
final
over
report.
$1.3 million.
I'll review it immediately.
Consistency is the only bridge between financial stress and a comfortable retirement. Beyond individual investing, entire professions will be transformed by this movement of wealth. Financial planning, estate administration, and legal services are entering a golden age. Real estate transactions will accelerate at a pace we haven't seen in decades. And trust litigation will become a booming industry. As estates are contested, those who develop skills in managing, protecting, and deploying this capital will find themselves in high demand. The share of millennial and Gen Z clients at top-tier financial firms has already jumped from 8% to 25% in just a few short years. Advisors who speak the language of the new generation are capturing business that will compound for half a century. We must also recognize the spousal transfer dynamic, where $54 trillion will first pass to surviving spouses before moving to the next generation. Nearly $40 trillion of this will be controlled by widowed women, creating a massive and growing market for financial services tailored specifically to their needs. The full impact of this transition will not happen in a single day. It is a marathon that will unfold over multiple decades, rewarding those who position themselves early. The question of timing is a trap for the weak. In 2009, nobody knew where the bottom was until it was already behind them. The great wealth transfer does not have a single bottom to time. It is a process that is already well underway. The oldest members of the boomer generation are turning 79 in 2026. And the transfers are happening as we speak. Waiting for a perfect entry point is a guaranteed way to miss years of compound growth while the capital continues to flow without you. The best time to plant a tree was 20 years ago, and the second best time is right now. This logic applies perfectly to the current economic landscape. What is most striking about both the opportunity of 2009 and the present moment is how public the information truly is. There is no secret society holding this knowledge, and there is no hidden ledger. The data is documented in research reports available to anyone with an internet connection. Yet most people will still fail to act. In 2009, it was fear that paralyzed them. Today, it is distraction and short-term thinking. To thrive, you must maximize your tax-advantaged contributions and maintain exposure to the broad equity markets. Do not try to guess which single company will win. Instead, own the entire market and let the $124 trillion wave push your portfolio forward. Develop skills that serve the movement of wealth, whether through your career or your side investments. Build a cash reserve so that you can be opportunistic when the market temporarily misprices an asset during a crisis. Most importantly, extend your time horizon and think in decades, not in months. History will record this period as a defining event in the story of human prosperity. The United States has seen this before. After the Civil War, and again after the Second World War, where the middle class was built through industrial expansion and housing appreciation, average home prices have risen 500% since the early 1980s. And the stock market has risen nearly 3,000% in that same span. Each of these eras minted millions of millionaires who did nothing more than participate in the expansion of the economy. The great wealth transfer is simply the next chapter in this unfolding story. $124 trillion will move, economic activity will accelerate, and new opportunities will emerge from the chaos. The transfer is not a possibility. It is a reality that is happening at this very moment. The only variable that remains is your position. You now possess the scale, the timeline, and the strategy. What you choose to do with this information will determine whether you are a witness to history or a beneficiary of it. The door is open. but it will not stay open forever. In 30 years, a new generation will look back at this moment, the year 2026, and they will see it as clearly as we see the opportunity of 2009. They will wonder why so many people stood still while the largest transfer of wealth in history was happening right in front of them. Do not be the person who explains away their missed opportunity with excuses of bad luck or bad timing. The information is here. The capital is moving, and the system has given you a glimpse of its inner workings. Now, the only thing left to do is to act with the same cold, calculated discipline that turned a school teacher into a legend. Your future is not a matter of chance. It is a matter of positioning. Choose wisely